on the stock. But we have just half an hour to go for expiry for the end of the series. No real volatility just yet, but let's get Siddarth Bhamre of Angel Broking into our conversation. Siddarth, hi, afternoon. What would the last half an hour strategy be on the index? It hasn't moved much up until now.
Good afternoon, Sonia. Actually, the last 2-3 hour strategy would have been buying 8850 call option. We are sensing still that market may close in positive around say 8920, 8930 odd levels, and we were suggesting to buy 8850 call option on dips when spot levels were around 8870 odd levels, so around say for $30. That would have been strategy, but again, if you get the dip, then only you buy it, don't buy now. That's the thing. What we have observed in today's session, that people have played safe. They have sold 8800 put option and 8900 call option and pocketed some around 6, 7, 8, 10 rupees and have not taken bigger calls of 8900 call put or 8850 call put. So people are playing safe in this expiry. That's the reason volatility is not there. But still, I feel that the way FIs have formed long positions, barring yesterday, it would be in their interest that market close higher in this series. So they may try to pull market up. And from the components point of view, because there is negative news surrounding PSU banks, so other laggards in heavyweight of index like IT, L&T not being laggard, but that stock may contribute towards last minute upward move, including ITC.
Siddarth, that's said and done. It's been a spectacular January series. 9,000 is a breeze for February?
We are not very far away. If we close at 8920, 8930, we are then talking about less than 1% move. So that should not be debatable whether it would come or not. Point is that can we go substantially above that level in Feb? My guess is, or right now what we are studying from statistics is, answer to that is yes. Now, Minka, a lot of people are worried that the open interest in index futures have swelled up a lot, and in fact it is at 1.5 year high. And if you see on face of it, prices have gone up, open position have gone up, so people will say there are too many long position system, and there is good rollover also, so there is chances of long unwinding, and I completely disagree with that opinion. Reason being, you had FIs forming long position, you have HNI retail forming short position, and that is the reason, despite market going up, open interest going up, which is clearly formation of long position on face of it, still your implied volatility is quite high. Today, if you sell put option of 8,500, 8,600 of next series, your implied volatility is 21, 22. That is thing of past. Last 1.5 year, we have not seen such high IVs. This clearly suggests that people are still stuck in their short position. They are rolling their short position and selling some put option or buying some put option to hedge it. So this momentum may continue. FIs are also rolling over their positions. So I feel 9,000 would be quite a small task. We should think about much higher levels. Again here at 8,500 we have changed our view. We were no more short, but we have missed out on this rally in Nifty front, but we are going long in stocks and playing in this rally. That should be the disclosure.
All right, so what will then sort of help move these markets further higher? If 9,000 is just a breeze and we should be aiming for higher levels, will it be financials yet again given their weightage on the Nifty, etc., or would you be looking at other areas as well?
So it's a no-brainer that financials have to contribute if Nifty has to go up. That should not be discussed much. But what I feel is that despite crude oil now stabilizing or slightly negative bias, Reliance is showing promising sign that the stock may continue to rally from current levels. We have seen that how FMCG balancing act has been going on. When HUL was going on up, ITC was coming down and vice versa. Now HUL is correcting from higher levels, ITC is moving up. Again, I stick to my viewpoint that the negative news which people are perceiving it to be negative, that the ban of loose cigarettes, I think it is not negative. The cigarette consumption would increase if the packet selling is made mandatory, and ITC can contribute significantly to this rally. L&T after small correction probably can show you a good bounce. Stocks where Basically, it would be more of index rather than stocks because people are stuck in index. Bank Nifty or Nifty, there are a lot of guys who are stuck there and they are rolling over their position, and that is where we would do our active trading rather than getting into stocks from here on. Till here on, we have been long stocks, but not we missed out on Nifty. But as and when we feel like yes, this is the point to go long in Nifty, we would.
Okay, fair enough. One pocket that has been hit the hardest this series, Siddarth, is the metal space. Hindalco, Sesa, Sterlite, Tata Steel, all down about 5 to 10% after the underperformance last year. Do you think this sector will continue to stay low?
I think they would continue to underperform even if first part of Feb would be slightly better, or till the time FIs are carrying on to their long position, they would underperform because stronger dollar is not doing any good to that sector. And from the derivatives data perspective, be it Tata Steel, we are seeing 400, 405 levels. There's shorting happening. Hindalco, where we are active. These two stocks we generally track very closely. Hindalco is a good buy or is in accumulation zone between 135, 140 odd levels. So probably it may not correct significantly from current levels, but may not go up either. So around 138, 140 you buy, you sell 150 call option for Feb series. Feb series is smaller series in terms of duration, and IVs are high at this point of time. So time value decay would be faster. So Tata Steel I would sell on rise, and Hindalco I will play covered call.
Okay, fair enough. Well, I just wanted your view on what one should be doing in the Feb series with the mid-cap index. There has been a degree of outperformance we've seen in the last couple of weeks. Any index or stock-specific strategies that you would recommend in the mid-caps?
Stock specific, yes, because there are some stocks which are doing good. In fact, Tuesday we were mentioning to buy IOC. Our technical guy was suggesting to buy HPCL. Both are doing well. Tata Chemicals and UPL are other stocks which they have recommended to go long on. They are doing well. What I sense is mid cap as a whole may not go up, but selected stock would go. Why? Because those people who are still short and rolling over their short position, they will try to cover up their losses by going in some high beta large cap stock, mid cap stock, which would probably they feel would do wonders for them and may get stuck there also again. So I won't touch mid caps, barring few names which I took, and probably as and when we get some good ideas from very short term perspective, like from 3-4 days perspective. Otherwise, if someone asks me that will I be more overweight mid caps in last 200-300 next 200-300 points in Nifty, my answer to that would be no. My main preference would be index and then large cap. I may not touch mid caps, barring few stocks here and there.
All right, now the